So I'd like to thank my dear friend Pallav Rajan and PMS Bazaar for the partnership with AdFactors Capital Market Group. And obviously, it is always an honor to be with all the three friends and mentors, 𝐻iren, Vikas, and uh, Mr. Tibrewal, Pankaj, who's a small cap expert. So I wouldn't spend a lot of time in the long introductions. You all know their styles. You've heard them before. Uh, I would like to come straight to how they are positioned right now and how they are looking at the various indicators in the economy, because that is what matters to the portfolios, whether we are running it ourselves or we have allocated money to professional managers. We are interested in knowing how these three, with their vast experience, practitioners, are approaching markets right now with their wisdom and what is their vision of the market from here on. So, gentlemen, thank you very much for your time. Good to be with all of you. 𝐻iren, let me start with you. For the last 14 months, we've seen, after a very good run, market went to a consolidative phase. We all know the triggers, what happened. But having managed large sums of money for HNIs, super HNIs, what were your reflections of the last 14 months? If we were to, some wisdom or some learning for your own self, which you have, when you think back, कि यार 14 महीने निकल गए, बाजार कहीं नहीं गया, especially broader markets had a run, one or two learnings which you may have thought to yourself from reflection, निचोड़ जिसे कहते हैं, gist of last 14-15 months.
Well, now I have the benefit of hindsight, so I can answer that question. No, I think that it's the age-old wisdom that says that finally, whatever be the narratives in the market, markets in the medium to long term follow earnings. And I think fiscal 24-25 and the first half of this year, we've seen broadly earnings struggle, right? Last year, we were running a very tight fiscal and monetary policy. Early this year, we've started to see that the government responded by loosening fiscal policy, by tax cuts, then GST cuts. RBI has been, also been infusing liquidity, cutting rates, etc. And finally, in Q2 of this year, we are seeing a glimmer of hope where finally earnings are getting back to double digits, right? Nifty is still struggling at about single digits, but I think the broader Nifty 500 or NSE 500, we are starting to see that earnings is coming back and second half looks much better. So I think that last year you had relatively higher valuations and you had lower earnings growth. We can now force fit whatever, we can argue that it was the Trump tariffs and, XYZ. These are all narratives that we force fit. But I think the single most important reason was that the markets were expensive and earnings were falling, right? And I think now that we've gone through this consolidation phase and earnings seem to be coming back, I think the stage is set in terms of, markets doing much better from here onwards.
So you're kind of saying that it was actually earnings which kind of failed for last 1.5 years, and that's why it was obvious that a market wouldn't perform in such a scenario. Fair point. Because you also meet hundreds and I would say dozens of managements across sectors, both listed and unlisted. What is the feel you're getting when you look at the companies and the earnings quality now? What's your sense? You're traveling as well and you're meeting companies all across sectors. And is it matching with the valuations now, or is it much more comfortable?
So I think, thank you very much, the PMS Bazaar team, for having me here. So clearly, I think, in every market there are good companies, bad companies, but generally speaking, my view on earnings cycle has been very positive since last 2 quarters. I remember, on 15th April, we did our call with our investors when everybody was in panic post-tariff. And that time we outlined that we think second half of this year, corporate earnings will be very, very robust. And the reason, if you understand why it was like that, a little bit backward to history. Last year, somewhere in March 24, our previous RBI Governor Shaktikanta Das, he had, in order to defend rupee, created liquidity squeeze in the system. Almost 3.5 lakh crore of liquidity deficit was there. That got coincided with general elections. During elections, government does not release payments, right? So that also compounded the liquidity. Thirdly, the RBI governor had actually came down heavily on unsecured loan growth and all those things. So loan growth slowed down. So all these three things put together created a huge amount of liquidity squeeze in the economy, which started impacting corporate earnings with 2 quarters lag. So September earnings were good, markets also peaked out, but by the time you saw December, market were peak, earnings were slowing down, and that's when you saw a consolidation phase. But what market, in my opinion, missed to notice what was happening positively post-December. New RBI governor came, first thing he did was remove the liquidity squeeze of 3.5 lakh crore to positive 1.5 lakh crore. He cut the interest rates by 100 basis points. Every statement he made that my policies will be growth oriented, including last policy where he announced number of measures to put the credit growth back into the system. There was a series of, so your credit growth is back in the system. Last year, Government of India cut the tax rates, income tax rate. GST we saw big time. Two big, drivers of the so fiscal and monetary stimulus were there. All those got ignored because of the first Operation Sindoor and then tariff tantrums, as I call, right? So there was a lot of noise around that. In the noise, a lot of these underlying improvements were happening. So in our call, I had said that what RBI governor is doing is far more important than Trump. Because, so like how corporate earnings got impacted negatively with 2 quarters lag, same way corporate earnings will get positively impacted with 2 quarters lag of all the changes which are happening. And that is what is precisely panning out. I mean, June quarter numbers were fine. September numbers have been very good. I think progressively every quarter earnings will be, simple funda to understand is boss, jab aapki sarkar aur RBI dono teji kar rahe hain. So kya problem hai, right? They are, and structurally there is no problem anyway in Indian economy, right? Tariff का क्या फर्क पड़ता है? 1.5%, 2% impact economy पे होता है, उतना तो हम एक quarter में grow कर लेते हैं at 6-7% earning growth, right? So there is nothing wrong in the market per se. We are in the middle of a long wealth creation cycle. In every cycle, these kind of tactical short periods of consolidation, come correction, come cleaning of the froth out will happen, and they are good for the market. They are healthy for the market. September last year, जो इतना fraud चल रहा था, sectors were fancied and all those things. Today they are down 50-60%. So that froth cleaning exercise always good. And in that sense, I find it a very solid, healthy base made in last 12 months for the market, for it to do very well from here. I am quite positive on the market. I am quite optimistic on the corporate earning. And finally, I think I'm super optimistic even on the liquidity side. I think we've been wanting to have FI flows for quite some time. Fed rate cycle has turned. 26 will be a great year according to me from a liquidity perspective. So you have earning and liquidity both base there. What else you want in markets?
Excellent. Pankaj, you are a mid-cap, small-cap specialist. Mid-cap market mein kya ho raha hai? I mean, all these indicators which Hiren and Vikas spoke about in the last quarterly earnings, global stuff, everything, many indicators are from amber to green, they are turning, but broader markets are just not responding. Or do they respond with a lag? Because you look at that part particularly closely. What are your thoughts on mid-cap, small-caps?
So I think let's look at the data for this year. Though Nifty is at a touching distance of all-time high, but I'm sure all of the portfolios in this room are not very, happy faces, because there's a huge divergence which is taking place this year, last 13-14 months. So Nifty is up 9-10% in this calendar year. Small cap index is down actually 5% in this calendar year. And a combination of mid and small cap, which is the top 400 stocks of mid and small cap, is just up 2%. So this year has been, despite of a little sluggish growth on Nifty, I think mid and small caps have done far worse than large caps. Coming to earnings growth, as Vikas mentioned, let's look at the numbers. And I think that will give us some sense on that will it come with a lag. This quarter, September ended, I look at the top 500 companies. I'm using 499 because Siemens Energy has a year ending September, so their results are not out. But 499 companies, earnings growth was 15%. Bifurcate that into BFSI and non-BFSI. BFSI 92 companies, earnings growth 7%. Non-BFSI, which represents the larger market, earnings growth 21%. Now look at the large cap, mid cap, small cap. Large cap earnings growth 7.5%, which is the top 100 companies. The next 150 companies, earnings growth 31%. And the next 250 companies, earnings growth of 36%, which is the highest in the last 7-8 quarters. But let me put in a caveat there that both the mid caps and small caps, the earnings growth which is above 30%, which we are looking, is because of few of the oil and gas companies like HP, Cochin, MRPL and stuff like that, where there was a crazy, number in terms of growth. But even if 15-20% earnings growth, which is much better than large caps, I think slowly and gradually markets will come and rebound it. My only worry is that in the small cap or the mid cap space, the supply of paper has been humongous. Every day we have a couple of corporates in our office for the IPO, and the market cap range is between 4,000 to 10,000 crores. So there's huge amount of supply of paper which is leading to secondary market money not getting absorbed there, and hence you have a large ample choice. The only caution I would like to assume is that the mid-cap cohort, which is the 150 stocks, there I think the valuations are very, very crazy because of the classification. Every fund house who have a mid-cap fund, 65-70% minimum has to be in those 150 stocks. And that's where I think one needs to be a little careful because valuations are not very, very, supportive. And this will be a stock selection market, as I have been saying. The last 4 years, everybody made huge money. I think last 14 months was a wealth preservation phase, and now will be a stock selection phase. It will frustrate people why the stock is not moving up, क्यों नहीं हो रहा, but valuations अपने आप correct हो जाते हैं over a period of time. And only thing one I want to tell to all of you is that whoever I meet, the young new lot, they are more earnings driven growth rather than balance sheet. And I think there you need to put a caution because last 12-13 months people have just gone crazy on only earnings growth, even if it is coming at the expense of cash flow or balance sheet. So I think long-term investing is not about only earnings supported by cash flow and balance sheet. I think many people will have a lot of disappointments. There will be a lot of frauds discovered over a cycle, and we need to be careful because the quality of earnings, I'm sorry to say, in many companies which are flying has not been great. Unless that earnings quality reverts back to good quality, I think they will have a tough time because capital markets have been very, very supportive in capital raising. So without cash flows, they have been commanding 100p, 150p, but that party may not last long.
Okay, that's a piece of wisdom, clearly, for all the investors out there practicing managing own money, that the equal focus should be on balance sheet and not just profit and loss. Vikas, from your style of management or your team's style of management, one or two pieces of advice or wisdom when you go selecting stocks, meet promoters, running screeners, which you are extremely careful about, if you could share with us.
So I think again this might sound slightly cliched, but I think सबसे बड़ी important चीज़ है the quality of the management. किस लोगों पे आप रुपया लगा रहे हो? Even आप हमारे लोगों को पैसा देते हो तो हमारे में क्या quality है, that will determine the outcome of the PMS. Right? Same thing is true for when we are putting money into the company. That which is the team which is running, what is their motivation, what are they doing? It's उस पे हम लोग we do a lot of work because ultimately if you get three things right, three things in these people: competence, integrity, and drive. If you have competence, integrity नहीं है तो हमारा पैसा नहीं बनेगा, कहीं ना कहीं fraud, accounting policies वगैरह में मिल जाएगा. Competence है, integrity, drive नहीं है तो धंधा grow नहीं होगा. So and पैसा growth से ही बनता है, right? Integrity है, drive है, competence नहीं है तो आपको competition छोड़ेगा नहीं. So ultimately you try to assess these three things in any management, any team which you are trying to do that. Once you have, it's like this: if I tell you that your banking looks very good, and you end up buying A bank versus B bank, we know that how two banks deviation can be, and without going into the quality of any name, but let's say for everything else being same, HDFC Bank versus ICICI Bank in last 5-6 years, there's a 5x difference of the return, right? So sector, does not mean anything. Sectoral tailwind can happen, but the outcome is determined by the company's sort of management team and business model they are kind of choosing. Even if sometimes, let's say you don't agree business model, or let's say you're not comfortable, the good quality management will pivot the business model into right ways, right? So ultimately, 70%, according to 60-70% return is determined by the quality of the management, competence of them, how they operate, what they behave, and that is where I think large part of the sort of effort goes. Then, of course, second is getting the business model right, and we have created our own views that what kind of businesses we like, what we don't like. We have clear no for some businesses we will not do. For example, we don't do microfinance. हमको पता हो business में 20 साल से किसी ने धंधा value नहीं create किया है. We don't do small banks because we believe that there is no value to be created. Inferior model, right? So there are certain inferior models which you kind of always say इस पे time ही नहीं लगाना. So then you keep on looking for, and lot of thinking around what kind of businesses make money, what kind of businesses create superior risk-adjusted return, those kind of things. And what other thing which we look at of course, valuation is the third part, which we do never overpay. We try to sort of see in our within range of what we are comfortable with. But most important thing, if you ask me, what I have learned over the years, one single biggest learning of my 20-25 years of one thing which determines return is rate of change. If you can focus on rate of change, what is changing from past, that is a significant driver of the return. Rate of change could be, the company management has changed and going into high growth trajectory, or rate of change for the negative side. So let's say companies historically has a great sort of track record, but suddenly negatively is changing. So how to avoid those negative rate of change and how to find positive rate of change? That is the, what we in our parlance, some of you must have heard, we call magic basket stocks, where you capture earnings growth and valuation re-rating. So that is where we focus a lot. What is changing from the past and how we can benefit from that cycle early on. So like, for example, we, and many of you are here, I know that are invested into our shift strategy. We launched shift strategy, which is our manufacturing and technology, in October 2020, 6 months after pandemic. I can tell you there was nobody single believer in manufacturing in October 2020. Forget उस time market पे conviction नहीं था. Why we could launch that? Because we could see a positive rate of changing happening. कि सब लोग बोल रहे थे, अरे manufacturing में बहुत problem है, ये नहीं होगा. What we could see was that things are changing positively. They were not perfect. People seeks perfection. कि China में ऐसा होता तो हमारा भी ऐसा होना चाहिए. That's not the point. Point is that we were there. From there, are we getting better? And will that bring growth? And that rate of change focused made us believe that this is the place to put money on. And that time, what was the greatest thing? Nobody was looking at that. Hence, valuations were cheapest. That time, most of the manufacturing stocks were available at 10 to 12, 13 P, which are today 30, 40 P, depending on what sector you're looking at, right? So when you are able to look at things ahead of the curve, beyond narratives, positive or negative rates of things. Like we never invested into HDFC Bank is a great bank, no doubt about it. But we could see negative rate of change happening. We never invested into. We never invested into Asian Paint. We never invested into Bajaj Finance because we could see negative rate of change happening, and hence that would get derated. So ultimately, these are, investing is a very big art and science combination. So everybody has their own way of looking at. This is our way.
Great. Hiren bhai, you have been running PMS for the longest period of time, perhaps one among the first generation of PMS. In your long journey, one or two instances or some wisdom if you can share with the audience here कि भाई ये करने से बड़ा पैसा बनता है, this practice, or some complete no, ये मत करो, इसमें पैसा टूटता ही है. One of those things if you could share. Painfully acquired wisdom or even gainfully acquired wisdom, कोई भी एक बताइए.
नहीं, pain gain दोनों है, but so I think I think that the age-old wisdom for success remains the same. There is no new formula as such, right? I think looking back, if I have looked at some of the investments that have done phenomenally well for us, what were the attributes of those business? I would put it, encapsulate in probably 3 words, right? One is that there has to be a large external opportunity for the business. जितनी opportunity बड़ी है, जितना जो आजकल लोग fashionably TAM बोलते हैं, right? हम उसको external opportunity बोलते थे, whatever, that should be growing because that is a tailwind. It's easy to grow when the opportunity is growing. Second is that you choose a management which can execute on that opportunity very well. As Vikas said, that in the same industry you can have very divergent outcomes. क्योंकि अपॉर्चुनिटी तो बहुत है. जब टेलीकॉम सेक्टर खुला था तो 8-10 लोग कूद गए थे, फाइनली 2.5 लोग बचे हैं अभी, राइट? सो अपॉर्चुनिटी इंडिया में क्या होता है कि जब भी अपॉर्चुनिटी बड़ी होती है सब कूद
सबके लिए
जाते
होती
हैं.
है.
सबको पावर प्लांट लगाना है, सबको टेलीकॉम करना है, सबको बैंकिंग करना है. But finally, who endures are people who really execute very well. And third is governance. So when large opportunity meets flawless execution with good governance, magic happens. I would now, in this day and age, add one more thing,
Okay.
which is, and especially in the last few years, there has been this little dichotomy which is there, is that I think India, Indian economy is changing very rapidly, especially last 5-6 years. We've been all saying कि India's digital stack has come, but we have never understood the real implications of that digital stack. वो अब समझ में आ रहा है धीरे धीरे कि while the external opportunity is growing at an X pace, there are several companies that are growing much faster than X. Why? Because they are taking away market share and profit pools of other companies, right? Broking देख लो आप. I'm just giving an example, right? मतलब we went from unorganized to organized brokers. From organized brokers, we've gone to digital brokers. And look at the scale and profitability that they have achieved, right? And therefore, I think in every business, there is an element of disruption that is happening in a very stealth manner. जब mom and pop retail store थे, तो हमको it was the organized big box retailers who came and disrupted them. Today, quick commerce is disrupting the big box retailer guy, right? So today we have to be very careful, because what happens is that yes, we all look at history, because when you tell somebody आप क्या देखते हो, तो मैं last 10 साल का revenue growth देखता हूँ, margin देखता हूँ, return on capital देखता हूँ. Obviously we look at all of those things, but as he said, what is the incremental change that is happening? कहाँ पे disruption हो रहा है? And sometimes it is so funny that you can't buy the disrupted because उसका profitability अभी तक establish नहीं हुआ है, but he's still disrupting a guy who is making money, right? So you have to avoid both in some cases. ना new age low, ना old age low, better हो.
You don't have to play every ball which is
You don't have to play everything. Like, at least I will say from our case, like we never played renewables because we never understood, because our feeling was that inherently you're not cost competitive compared to Chinese. And if you're doing well because of duties, then you never know when you will get disrupted, right? So you don't have to dance at every party, right? So I think that today, external opportunity, great management team to execute, good governance, and you have to keep one eye on disruption. Is your business getting disrupted? And if yes, what are you doing about it? I'll give you another example, which is a blue chip. Everybody has owned it, right? Bajaj Finance, for example. Great business, right? When we invested in 2010, obviously consumer lending was still in its infancy. And it's not as if that others were not doing consumer lending. HDFC Bank was doing, ICICI was doing. There were so many other people who were doing. But they executed on that flawlessly. Right? And obviously governance was top notch. Now, probably they're one of the few companies who's saying that I'm using AI in 6 or 7 of my processes, which is going to bring down my cost to income. At least that is the aspiration. Whether it'll happen or not, we don't know. From, let's say, 33-34% to under 30%. Now just imagine if another NBFC is not able to do that, this guy will have a great competitive advantage over the next guy, right? So I think today we ask a very important question whenever we invest in any company, apart from the other good stuff that everybody looks at, cash
The
flow,
hygiene
return
stuff,
on capital, कि disruption क्या हो रहा है आपके industry में, and how are you handling that?
Fair point. Very good observation. Let's move on and talk about some of the mega trends or some of the things, because all three of you work very closely and research. Like Pankaj, you had done some work of the way the rise of the 5,000 crore companies, the breadth of the market, the broadening of the market which is happening. Can you talk a little bit about that mega trend and what will it lead to? Because in this is still micro cap, right? But these are very large micro caps.
So let's look at the data. Not too long ago, 2017, the largest small cap company's market cap was 8,500 crores, the largest. Today, that number stands at 32,500 crore, which is the 250th as classification would be. And the smallest mid-cap company starts from 33,000 crores, going up to 1 lakh crore. The 5,000 crore plus market cap companies were 115, 116 at that point. That number stands today at about 680 odd, above 5,000 crore market cap. And the 500th market cap company today is at about 11,000 crores. So in the last 6-7 years, there has been a very significant enhancement of the depth of the market in terms of market caps. And the reason I'm saying this data is very important because over a period of time, when you look at companies which move from 10, 15, 20,000 crores, they have seen cycles, they have made their own mistake and share of own mistake. So maybe you may not have caught them at 5, 10,000 crores, but even if you catch them at 15,000 crores, their journey from 15,000 to say 70, 80, 90,000 crores, which is 5x, 7x more, and still be classified as mid-cap.
So you see that as an opportunity for stock pickers?
A lot of opportunity now. But just a little bit of a caveat there, that earnings growth has been there, but a large part also has been supported by PE re-rating. So don't ignore that as well. But the breadth of the market has been improving significantly, and that provides an opportunity for active managers. A lot of debate keeps on happening between passive versus active. Last 12-15 months, obviously passive has done maybe better than many of the active managers because of the divergence which I spoke about and because of the concentration which I spoke about. But just look at the next 5-10 years opportunity. The largest, fastest growing sectors are not in the large caps. There may be very few of them, but IT may not grow, the incumbents may not grow at 5-7% more than that. The incumbent FMCG may not grow at 5-10% or more than that. Banking will have its own challenges, but 15% max to max growth. So the large emerging sectors are probably in that 10,000 to 15,000 crore bucket. And if we can identify those right companies with right governance, right promoters, right balance sheet and cash flows where they need not need external capital to grow themselves, I think you have got a winner in your hand.
Very interesting.
So despite of the dislocations, divergence of the last 15 months, ignore that for the time being. But I think the opportunity for us to generate that extra return from this space, I think I am very excited about that. And we need to do the hard work at the ground level, going and meeting the
So
company.
what percentage of your portfolio is comprising of such companies?
So I run a mid and small cap mandate.
Entirely.
So 90% of my portfolio is into that bucket. Average market cap will be between 23 to 24,000 crores. That used to be a large mid cap 7-8 years back, but now that's classified as a small cap.
Sure.
But look at the companies. It may be as a market cap, it's a small cap, but they are leaders in the segment they operate in. It may be a mid cap by name and definition, but they are the largest market leaders in the sector they are operating. And that's the opportunity for us for the next 5-10 years, that many of them will double their earnings in the next 3-4 years with the right balance sheet and cash flows. And can we catch few of them right in our portfolios is the endeavor.
Because the way you spotted manufacturing in 2020, how are you scanning the environment now? Any trends which are emerging or taking shape but largely ignored overall, which you have spotted or you are researching right now?
Manufacturing kind of trends come very rarely, consider they are decadal trends, but I think India itself is a very big trend. If you ask me, the fact that our India story, in my opinion, next 10 years will be a very, very big story. Our last year corporate profits were around $170-180 billion. right? Which in 2001 it was $8 billion. Now in last 2022 year, despite all the challenges we are, our corporate profits have gone to 22 times, right? Now just think, extrapolate, there could be many, but I think this number in next 10 years by 25, 35 or 36 can go to $1 trillion. 800 million, whatever number you take, but $800 billion, $1 trillion kind of range. If our P is 20-25 times, your market cap could be between 20 to 25 trillion dollar, which we are today at $5 trillion. Now, when this kind of transition happens, many trends, sectors, opportunities come about, right? Like in this 20 years ago, banking, BFSI, largely it was, PSUs, then private sector came, and then a lot of these whole other financial services, whether insurance, wealth managers, brokers came out. So within each sector also a lot of transition happens, a lot of companies come about. Healthcare, according to me, is a very large sector. As per capita income goes, we spend on healthcare. Now, many new models will come about, specialized chains would come about. So I think I would say that rather we all need to see what are the, there are always mega trends, but within mega trends, you need to identify what are sub trends, and within that, the most important thing, forget about trend, identifying the company.
Right people.
That is where, you can get all the trend right and still not make money. So that's the important part. So in my opinion, I always discourage to generally saying what are the mega trend. India is a mega trend.
But spot the right
And
company
spot
there.
the right company. Right now, it's like this, when whole EV mega trend was there last, we've never invested into an EV trend. There are 200 EV companies in the country. Especially two-wheeler. Abhi kitna bacha hai? 4-5 meaningful hai. They have done something, still they are not making money.
Sure.
So, the sector might happen. Education is a great opportunity, mega trend.
But things to
How
avoid.
do you make money? So I'm saying mega trend spotting is,
Passe.
in my opinion, is a little bit of a
Misnomer.
wrong place to focus on. Focus on
Companies.
and and trends we know. We all know healthcare. Are we spending more money or not? We're spending on consumer durables, more money. Identify companies in that, and that's the real challenge.
Hiren, any risk which you are analyzing in the environment and you're preparing for it? Global markets, or maybe the earnings recovery which may have started getting delayed, or any other risk which you are factoring in your portfolio approach right now?
See, I've realized one thing is that all the risks that we talk about are known. The real risk is the one that we
Unknown.
don't know what's going to hit us, right? But anything can go wrong. I mean, personally, I feel that there are obviously some very obvious areas where we have to be very careful. I think this whole trend of IPOs coming, listing, and then immediately we are seeing massive, run up. Clearly, it's very tempting for anybody, but I think we have to be very clear. All of this will normalize over a period of time, as it usually does. Market takes care of everything, right? But other than that, I think today, just at a very broad macro level, I don't see any very obvious risk. Obviously, as I said, the real risk is the one that I and you do not discuss about. If in your PowerPoint wo likhna padta hai ki risk hai, if those are the risks that everybody knows and market knows how to price those risks, right? So I think I don't think India's macro has been as good as it is today, right? With balance sheets so under leveraged, and in my view, I think there are a couple of sectors which have been generally very sluggish because of the whole trade and tariff and whatever. Incrementally, I think that there are some good quality companies there which can really deliver returns. But otherwise, I'm very, very bullish on the markets going forward from here. I think earnings picture is looking good. Monetary fiscal policy seems to be in place. We just have to steer clear of narratives. And I think there is a little bit of this bubble in the IPO markets, which one has to be a little careful about.
Very nicely put, because I wanted to come to you on that IPO issue. On the IPO matter, are you analyzing IPOs? How are you looking at that side of the market, the primary market? Are you looking at each one of them individually or generally staying away?
So I'll answer that question, but before that,
Sure,
I want to
sure.
just add to the previous thing. One trend I will tell you, which
Sure,
is controversial and contra to.
Sure.
I think everybody is written of IT sector. According to me, many companies will come in IT sector, which will be 10x, 20x, 50x. People are thinking India has no game in AI. I am telling you, in AI, services led, There will be many companies which will become big. See, currently people have just written off the IT sector. See, think about in the context of an enterprise. How do you implement enterprise-led AI solutions? अपने आप थोड़ी होता है. So it is IT companies which will do that. And in every cycle, new IT company gets created. We forget that in 2000, Infosys, Wipro, Satyam got created. But in 2009 to 20 cycle, you had Persistent, whose market cap was 1,000 crore, today it is 1 lakh crore.
Sure.
HCL Tech was Minnow, today it is like some 20x from there. So every cycle, new set of companies come and become very big, right? You will see in this cycle, many IT companies will become very big. That is where, so when there is no positivity, there is always an opportunity.
Opportunity. That's a mega trend.
Coming the question to the, to the question of IPO, again, I mean, I have been on the
This
other
is
side.
what I was looking for actually.
So as IPO, I mean, I have been a banker. I have done 100 plus IPOs in my previous career, and also see, IPOs are the best when the markets are bad. Right? Today, most of the IPOs are coming fully priced, glamorized stories. Bankers, of course, kind of create a huge story around it. So most of the time, our general approach to IPOs is no, unless we think something is very interesting company coming at a right price, right? That's the only reason, because I'm not saying IPO per se are bad, right? IPOs, of course, give you access to the very, very interesting companies. Only way to get new sectors, new companies coming into the market is only IPOs, because every time economy transitions, new sectors come about. There were hardly any healthcare 20 years ago. Today, there are many healthcare opportunities. So that's very, very important. The only thing is that, and in fact, we like to invest into companies which are post 2-3 years of IPO. By then, all the sheen has gone, excitement has gone down. If you go back and check companies which IPO'd 5 years earlier, in the last 21 cycle, you will find many of them, or 80% of them are 40 to 50% down. So, companies are good, but you might not make money. And hence, look at Paytm IPO, it's like after this rise also is down. We bought Paytm at 500 rupees, not at 1800 rupees, right? So you got to track those companies.
Sure.
They are good business models, but they may not be the right investment. So IPOs are generally, we feel, there's a lot of euphoria around it, unless we see everything, but do very little.
Evaluate everything, but act on very few of them. Pankaj, I'll let you have the last word, because mid-cap, small caps is generally the area of all HNI's interest. Are you finding bargains there, or still not very, juicy bargains, but still valuations are better off than they were 1 year back?
So it depends. So last 25 years, there have been many cycles like 2008-9, 2013, 2018-19, where mid and small caps were the bad word, right? There you were getting companies, if you had a little bit of appetite, 3 years down the line at 10x P. That's obviously not the case today. So very juicy bargain, tough one. But has the market consolidated over the last 15 months? Many high quality names probably have started to look good. Answer is yes. So I think one needs to be very selective in the markets right now. Not everything, in my view, will go up, because it's still not the 2018-19 phase where people were just throwing in the towel and very high quality franchises were available. But selectively, I think there are opportunities emerging. In many cases where I've been, so there is a two-tier market right now, friends, where there is earning growth and visibility for the next 1 or 2 quarter earning growth. It's perfectly priced in, or more than perfectly priced in, because सबको वही लेना है, सबको वही momentum पर चढ़ना है. In many companies where there is a 2 quarter no visibility or slight bit of earnings disappointment, वो किसी को नहीं छूना है. And that's where I think the opportunities will lie, where if you have a 2-year, 3-year appetite, and these are quality managements which will come back very strongly, leaders in the sector, I think वहाँ पर बड़ी opportunity बन रही है, because वो किसी को नहीं छूना है. So market has become very polarized, very 2-tier market. But ये जो second tier है, यहाँ पर opportunities ढूंढने का time है, और I am seeing that at least maybe 2 dozen, 3 dozen companies have started to appear on that screen, where things have started to look, and these are companies which are generating 300, 400, 500 crore of operating cash flow. आज मैं अगर ऑपरेटिंग कैश यील्ड में देखता हूँ, तो आज वो 3 से 5% नॉर्मलाइज्ड अर्निंग की कैश फ्लो यील्ड पर ट्रेड कर रहे हैं. सो आई थिंक दैट्स व्हेन द टाइम व्हेन मार्केट्स विल से कि अर्निंग नहीं आ रही है, अभी नहीं देखने का, 2-3 क्वार्टर बाद देखने का. बट दीज आर हाई क्वालिटी फ्रेंचाइज. आज ही वो टाइम है जब आप
उतना
काम
भाव है।
करके भाव है, तो
उतना
जब
भाव।
भाव अच्छा है तो न्यूज़ अच्छा नहीं होगा, जब न्यूज़ अच्छा है तो भाव अच्छा नहीं होगा। आपको चूज करना है कि क्या करना है।
That's a useful input. On that note, thank you very much, all three of you, for your time today. Thank you, PMS Bazaar, for this opportunity.